Hello, everybody. This is Joshua Hayes of BigWaveTrading.com coming to you with the May 7th stock market wrap-up. And what I want to go ahead and go over is that today was a pretty nasty day overall for the indexes. As you can see, the New York Stock Exchange was down 1.54%. The S&P 600 was down 2.18%, and you can see the kind of rollover on the short term there. And the NASDAQ was chopped the hardest, down 2.44%, slicing right back down through its 200-day moving average. Now, I want to remind people, in bullish uptrends, heavy volume distribution days are normal. However, it is how they act after having one of these days that matters. And if you don't even believe me, what about what we just had on April the 20th? Remember then? Look at April the 20th. Let's go back to that day. Do you remember that day? Do you remember when the market was down 3.88% on huge volume and everybody was certain that that was the sell signal? We just came back from a long weekend. We come back and boom, look at this huge volume that hits us. But the New York Stock Exchange volume is lower. However, the NYSE went through a day where it had heavy volume on the uptrend, and it was down 2.13%. Back on March the 20th. Very next day, fixed. Huge gain, huge up day on below average volume. However, as it went long, on 420, it didn't have a big day, but the NASDAQ did. And obviously, you can see on the NASDAQ on the 20th, what it did the very next day. Fixed completely, back into an uptrend. However, now after taking over the 200-day moving average and strong volume, and having a good intraday session overall yesterday, I was saying that recently I've been having shorts instead of longs come up. After having a whole bunch of longs for a long period of time, all of a sudden on May 5th and May the 6th, I don't have any new longs. None. No new longs for 2 days in a row. So for the 5th and 6th, as you can see here, the 2 days where the NASDAQ kind of just does nothing, but it has bullish intraday reversals. But look at the relative strength line. Doop. Well, price goes up, relative strength dies. Why is that? Because big caps, as you can see here via the New York Stock Exchange, started to get all the love. And in the past 4 days, while big caps was up 6.84%, the NASDAQ was up only 2.43%. Kind of worrisome to see that kind of negative divergence. And what that negative divergence led to was I had no new longs on the 5th, but I had a new short. Interesting. And then yesterday, once again, no new longs, but one new short, and even a stock to add to for my shorts. So that's two new shorts to 0 new longs in the last 2 days. So was the pullback expected by me? Yes. And that's what I believe I told you in the past couple of commentaries, to expect a pullback, especially whenever we saw the NASDAQ start to lose its relative strength line luster on 430. After that, the New York Stock Exchange took over. So that's why it was up 6.84%, while the NASDAQ was only up 2.24%. Now, these have closed. I'm doing this too early, so I can't show you the United States dollar on the telechart system. I just show you that it continues to be in this range right here. Connect this to there. Connect this to there. Actually, I don't like that line. Let's go and just connect it up here. And you can see it's in a triangle basing pattern. Symmetrical overall. Better seen on an F2 on a weekly. See how it's symmetrical pennant formation forming. When it breaks out of the pennant formation, it'll either be up or down. As you can see, 1, 2. There's going to be a third touch for the line up here, or a third touch and break down there. We'll find out. But it's in that consolidation area, as you can see, and it's getting tighter and tighter as it gets closer to the apex. Gold continues to be just a solid metal overall. I like gold. I'm not bullish. I'm not bearish on gold at all. Long term, I'm very bullish on gold. Silver is the poor man's gold. I like it too, but not as much as gold. Platinum, I don't know. It's gonna technically the 200's gonna need to turn up and then the 50 is going to need to turn back down below the 200, then turn back above it, but have both trends, averages, and the uptrend. And once that happens, then maybe I'll like them. And I can't show you the IBD indexes because they're not updated yet on Investors Business Daily. So let me show you the semiconductor index and look at the big thwack it got today. Thwack. Notice how the relative strength line was holding up, but today now you've got to break down to a new low below this low in April on the relative strength line, and look at the April support still there for price. That's called negative divergence and does not foretell a good next few days for the semiconductor index. Same with the NASDAQ. Look at the NASDAQ. Now look at this low right here, okay? Now let's go back to that low right up here. Now look at where our price is. Uh-oh. Yes, that's negative divergence also. So the big tall red bars, they're showing up now on a weekly. Not that bad. Actually pretty bullish with intraday reversal. So far this week, not good. Not good at all. However, it's how we act the next few days. Like I said, that's really important. Do we continue to sell off on volume, or do we hold up and start to reverse and go higher like we did April 20th on the NASDAQ with heavy volume, by the way, and then March 20th, right? March 20th, right, on the New York Stock Exchange. Now, what I want to show you is, remember how the NYSE volume was heavy that day? The NASDAQ volume was heavy on the April 20th? Well, the bad news kind of is that volume's heavy on the NASDAQ today, and it's kind of heavy on the New York Stock Exchange today. Now, the NYSE isn't huge and isn't viciously heavy, but it is bigger than the day before, and it is the biggest volume since the beginning of April, near the end of March. And that can be said, too, I guess, for the NASDAQ. Yeah, wow. Biggest volume of the entire uptrend from March. So this is either one of two things for me. This is my period where the bases will form. Swing traders will believe we're in a bear market, and they will go short too early and be knocked out, and then be complaining about not being long because the trend's going without them upward. Or we are about ready to base out and create some beautiful bases for some better breakouts to occur. We will see what happens. I'm hoping that this is the start of a pullback that leads to new highs. Hopefully the 200 touches the 50. We break out and go higher. But just remember, our scans can tell all the difference. On the 30th, we had two canceling quality longs. On the 1st, a very speculative new long. On the 4th, another speculative new long. Not that very, very speculative, though. On the 5th, nothing for long. On the 6th, nothing. And for shorts, we went from not having anything, 0 on the 1st, 0 on the 4th, to having 1 on the 5th and 1 on the 6th. So that tells me that we're on the right side also at Big Wave Trading. So congratulations, subscribers. We made money on the whole downtrend in 2008. We've made money so far in this uptrend. We still have winners. We still have some not to fully sell. But sadly, we do have some stocks that need to fully sell. And one was a big winner for us, but we got to get rid of it now as the pattern is put in is very ugly. So I'm going to be coming back with part 2 and part 3 for subscribers and going over a lot of scans and taking my time tonight on these charts, just so I can try to give you the best kind of analysis that we have on the upcoming days. Are we going to pull back? Is the rally attempt over? Or are we going to base out and go higher? I'll answer these questions in part 2 and part 3 and in my scans tonight. Aloha.